Hey everybody, I hope everyone is doing well and had a good day. Today's video, we're going to review the E-mini S&P 500 5-minute chart for Wednesday, July 15th, 2026. We'll start with the daily chart, higher time frame context going into the day. The market has been in a trading range, and for the more recent bars, we've had this bull micro channel. Basically, it's a small spike, pullback, and channel structure with 3 legs up here, and then this inside doji bar is yesterday. So what are my expectations going into the day? I think if the market goes above yesterday's high, there's probably sellers above. It's a small inside bar, trading range bar in a bigger trading range near resistance. And with the spike and channel structure, it's leg 3, maybe leg 4. If we do get above this high, this is July 10th, it's basically a stairs pattern, so limit order traders selling at prior highs are making money. The traders selling above this bar made money. Sell above this bar, bears make a profit. Sell above this bar, scale in, they make a profit. So if we get above this swing high in this channel at the top of the trading range, I suspect traders will make money selling up here. Here's the 5-minute chart for the day. We had a gap up going into the day and a follow-through bar for the bulls on bar 1, far above yesterday's high. Yesterday's high is this blue line. That's good for the bulls. Trading range day yesterday, the market's breaking far above that resistance. But the problem is we're not yet above that July 10th major resistance that I just showed on the higher time frame. And that's marked by this red line here. So good for the bulls, good momentum. Gap up and follow through. Probably will get a second leg up, but let's see if the bulls can break above the resistance. Reversal bar on 2, so the market's hesitating at that resistance. It looks like a minor reversal so far. Probably buyers below 2, buyers below 1, still expecting the gap up and follow through to get a second leg up. And breakout bar 3, so still probably buyers below 1, scaling in lower, probably going to make a profit, betting that the gap up and follow through gets a second leg. But now the bears have a reversal and follow through, bars 2 and 3, and that may get a second leg down of its own. On the open, first 3 bars, looks like a trading range on the open. And then 4, an even bigger breakout bar, so good for the bears. Possible vacuum test of support since we broke above yesterday's high and got follow through. The expectation is that yesterday's high, which was first expected to be resistance, becomes support, because in theory, any trader selling at yesterday's high is trapped by the gap up and follow through. So the traders who, in theory, sold at yesterday's high, scale in higher, they might use bar 4 to exit at their original entry and with a profit on their scale in entries. 3-bar micro channel down to bar 4, so good for the bears. It'll probably get a second leg down, but the problem is that it's occurring after the bigger gap up and follow through. So it's kind of a big up, big down situation, and we're testing support. So not ideal to sell bar 4, but second leg down expected. It's just that maybe a pullback will happen first. And then bar 5, bull bar closing on its high. For the bulls, it might be a gap up, a pullback, and then an attempt at trend resumption. We're at yesterday's high, the moving average, so a couple of support areas, and it's a bull bar closing on its high. So for the bears, they'll probably not sell at the high of bar 5. Limit order bears, first price they'll probably sell is at the high of bar 4. So we're probably going at least a little bit higher. Bar 5 will probably get a second leg up of its own. So the bulls get reversal and follow through 5 and 6. Now that's good for the bulls. There's trapped traders. Well, there's trapped traders above and below. So think about any trader who bought the close bar 1, they're trapped by the bear micro channel. Now any trader who sold the close bar 4 is trapped by the reversal and follow through. So you have resistance up here by the closed bulls on 1, trapped by the bear breakout and disappointed. But now you have sell the closed bears on bar 4, trapped by the reversal and follow through near support. So it looks like a trading range. Buy low and sell high. So there's probably sellers up here, and it looks like there are buyers down here. 3-bar micro channel to bar 7, good for the bulls, probably buyers below. Enough momentum that the first reversal will probably fail, but look where we're testing. The close of bar 1, and it looks like there's resistance at the close of bar 1 with the tail on bar 7, showing that traders are selling into the close of the bar. And again with bar 8, the market is channeling up on the lower time frame. We're getting sellers into the close of the bar, more overlap, sellers above the prior bar's high, still at resistance, the bar 1 close. And also, remember, so the traders who bought the close bar 1, disappointed by the bear breakout, they're selling in this area, and that can produce a second leg in the direction of the breakout. So the bear breakout still may get a second leg down, even though it's gotten a deep pullback. The bulls are hoping that they're getting a second leg up here, gap up and follow through, pull back, and second leg. This might be a minimum second leg for the bulls. It hasn't reached a measured move target, but if a trader bought the close 1 and scaled in lower, they're given the opportunity to exit at their original entry at break even and with a profit on their lower scale in entries. So probably resistance here. It looks like a trading range, so buy low and sell high. First reversal, bar 9, there might be more buyers below. There's decent momentum for the bulls, but the upside is probably limited. We just had a rally, pullback, It's probably sellers above bar 8, similar to what I was talking about on the daily chart. Bar 10, a breakout bar, but now that's 3 legs up in the channel on the lower time frame. The expectation was sellers above the high of bar 8. So bar 10, even though it's a breakout bar, not ideal for buying. It's at resistance, the double top with bar 2, and it's 3 legs up in a channel on the lower time frame. So 10, really not great for buying. And then bar 11, big bear breakout bar. The micro channel down to bar 4 got its second leg. It reached its leg 1 equals leg 2 measured move. And that's going to cause some profit taking. You have bears taking profits at the leg 2 measured move. And you also have the bears that I mentioned who sold the closed bar 4, trapped by the bull breakout, disappointed, and that's going to create support as well. So the bulls and bears are buying at support. So bar 11, strong bear breakout, but not in an ideal location for selling. It's right at support. It'll probably get a second leg sideways to down, but better to sell a pullback. Because we're still in this trading range, you don't want to sell low in the range. Where do you sell? You could sell in the sell zone of the bar, so a 50% pullback or deeper. You could sell breakout points like the low of bars 8, 9, or 10. Strong reversal bar on 12, good for the bulls, but now the market's right back at resistance at those breakout points I was just mentioning. So not an ideal location for buying, even though 12's a good looking bar. Market goes sideways here as we're sort of in the middle of this trading range. Probably sellers above 13, maybe buyers below 13, but they may not come in until a little bit lower. 14 breaking out. It looks like 11 starting to get its second leg down. 12 and 13 is a couple of legs sideways to up, maybe a 2-legged pullback on a lower time frame to the breakout points, and then 14 resumption down for the bears. So 11 getting its second leg down here, probably going at least a little bit lower. One thing I noticed too at this point in the day, the average daily range has been about 75 points, and the daily range at this point in the day is only 25 points. So the day's range could easily double, maybe even triple, to get to the average daily range size. With that said, we talked about the daily chart context and expectations for the day, probably sellers above yesterday's high and at the July 10th high. So I thought it was more likely, if we're going to go for a measured move based on the opening range, it'd be more likely to the downside. So I'll just mark this here. Call that measured move of the opening range, OR. 15 breaking out to a new low, but finding buyers below. It is still a trading range, and we're finding buyers near support. For the bears, it's been a channel, so it's a spike pullback because 13 went above bar 12, and we're starting to channel down lower to 15. 15, not a great stop order buy above the bar, and 3-bar micro channel, more likely sellers above the bar. Bulls might need a second entry long. 16, inside bar, so still probably buyers below the bar or sellers above the bar, and if you're going to buy, maybe better to buy below the bar. And then another leg down, or you can call it a push. Let's see. So we did not technically break above the high of 16, so this is still leg 2. If bar 11 is leg 1, pull back, leg 2, and a second push in leg 2, no technical pullback. Other traders count bar 4 or 5, leg 1, deep pullback, leg 2, pullback, leg 3. So this territory is not great for selling no matter how you look at it. You've got a bear channel line, you've got a late leg in what looks like a trading range so far. So what about buying 18? 18 is an inside bar. The channel down is fairly tight. You have some buying pressure with 12 and 16, but neither bar is a breakout bar. 12 was a reversal bar that may have been caused by bears taking profits at support, and the bar got no follow-through, and the market continued lower. And 16 is an inside bar, which also got no follow-through. So the channel down is fairly tight. Buying above 18 may not be ideal, as it's an inside bar against a fairly tight channel. It's right on that bear trend line. Another small bar added to the tight trading range, going more sideways, probably buyers below and sellers above 19. 20, bull breakout bar, good for the bulls, but high in this tighter, small trading range. I said tight channel down to 17, maybe close to a 50% pullback of that sell-off here. So that may be resistance. So as strong as bar 20 looks as a breakout bar, it's forcing you to trade in the middle of the range, which is never ideal. It's better if you can buy low and sell high. So there might be more traders buying below the bar than buying the close at 20. And it looks like there was a relative lack of buying on the close of the bar as the market went straight down on 21. Bulls not interested in buying here, but maybe they'll buy below the bar. What about selling 21? Maybe okay, but it's really difficult to sell 21 near the bottom of this tight trading range, especially as it's more clearly 3 legs down in a channel. So there might be more traders buying below 21, but they may not come in until a new low, like below bar 17. 22, reversal bar. So we're finding buying pressure. We have 3 legs down. And that's good for the bulls, but just another reversal bar. So let's see, can the bulls get a breakout bar? 22, not ideal for buying. There might be more traders buying below the bar, but as far as buying above the bar, well, think about the traders who just bought bar 20. They're clearly disappointed with the adverse move against them. So any trader who bought 20, scaled in lower, they might be using 22 to exit at break even. Inside bar 23, not a great stop order buy. 3-bar micro channel, probably sellers above 23. 24, bull breakout bar, but at resistance. The bears are able to keep a lot of these bars below the moving average. Moving average has been resistance since bar 15, and that's exactly where bar 24 is testing. And now it's 2 legs up, 22, pullback, and 24. And once again, the traders who bought bar 20 are trapped and disappointed by the sell-off, and they might be using 24 to exit at break even. So going more sideways here as we test that moving average resistance. Looks like we're in a trading range here, probably sellers up here near the bar 20 close and probably buyers down here. 26, a bull reversal bar, but on the lower time frame, you're going to count 3 legs up. 1, pullback 2, pullback 3, near resistance. Probably more sellers above 26. And then 27, a bear breakout. So back to that. Well, here's one way to draw the bear trend line, resistance, moving average resistance, 3 legs up, and then a bear breakout. So 27 will probably get some kind of second leg sideways to down. And there's room to this channel line as well. So breakout follow through, 27, 28, good for the bears, probably going at least a little bit lower. Again, that channel line is still far enough down. The bears can probably sell here and capture almost a measured move. Now it's a 3-bar micro channel since 27, maybe a 5-bar micro channel since 25, probably sellers above 29, sellers above 30. Micro double bottom approaching support, but not enough buying pressure to buy above 30, probably sellers above. And then we went outside down 31, now 31's testing the bear channel line. So this is a good area to take profits as we're testing support. But especially since bar 25 through here, not a lot of buying pressure. This is a bear breakout on the lower time frame, on the higher time frame, and breakouts usually get second legs, and they need at least a trend line break and a test of the low before they reverse. So probably going at least a little bit lower. We have that measured move of the opening range magnet or target below as well. I want to keep that in mind. But selling here, not ideal. Late leg on the channel line support. So finding support, buyers below the bar, buyers below the channel line. Probably not great to buy though. Again, the buying pressure through here is weak, probably going lower. It's a breakout on a higher time frame. Give up bar 33. Bear breakout, pause bar, another bear breakout. Getting close to that measured move target, we'll probably get there. There's not a lot of buying pressure. Really hard to make an argument for buying. So another pause. So bear breakout, pause, bear breakout, pause. Maybe the bears get one more breakout, but we're getting far below the moving average. We're breaking below a channel line and we're approaching a measured move target. So this is becoming, the risk is becoming big for the bears. It's more difficult to sell here. It's better maybe to take profits on shorts and wait to sell a pullback instead. And the bears get another breakout. So that's 3 pushes with pauses in between to the measured move of the opening range target. So let's see, can the bears continue down here? The market has sold off about, 35 points in 11 or 12 bars. It's not likely to continue down at this pace, especially with all the trading range price action on the open. I thought today was probably going to be some kind of a trading range day and not a strong bear trend day. Maybe it'll be a trending trading range day with the trading range, upper trading range in the morning, then a bear breakout, and then maybe a lower range in the afternoon. And since we're at that measured move target, it's possible we find support here and start to form a lower trading range. I think a bear trend is less likely. Also breaking below the bear channel line, probably going to reverse within about 5 bars and then test the trend line. That goes for the highest time frame that the pattern is visible on. So we see it on the 5-minute, but it's also probably visible on the 10-minute chart, maybe even the 15-minute chart. So it might take 5 bars on the 15-minute chart for the market to reverse. So you don't want to confuse that with the 5-minute chart where you might need many more than 5 bars for the market to reverse back up above this channel line. I still think it's difficult to sell here far below the moving average at a measured move target and breaking below a channel line. 36, finally a bull bar, the first bull bar in about 12 bars. So you probably don't want to buy it. There's too much momentum, too much risk that there's sellers above and a second leg down. And it's probably due to profit taking, not aggressive bulls buying. So probably sellers above 36, but they may not come in until above 35. Limit order traders come in above 35. Maybe they make a scalp on 37. Low one short, but still at that measured move target. And now we have the, at least on the lower time frame, sell the closed bears 35. Disappointed by the pullback. They may be exiting at break even here on 37. And then a small breakout bar. So now we're going more sideways to down. Still at that measured move target. Bears not clearly breaking out strongly below it. And then a bull bar closing on its high. Second reversal, far below the moving average at the measured move target. At a minimum, it's reasonable to exit shorts above 39, take profits above 39 because there may be a correction. Some bulls will buy 39, betting that it's a strong enough bar and the context is strong enough that it'll at least get a small second leg sideways to up. And then 40, a little bit of a surprising bar. It's a big breakout bar, but big tail, so it's pulling back into the close of the bar. But you know that any trader who sold, let's say, selling above 39, not ideal. Strong bull bar closing on its high, second reversal at the measured move target. But let's say you sold above bar 37. Traders who sold here are trapped by the bull breakout and they're disappointed. And that creates support. And it increases the probability that the bulls will get a second leg. So there's probably now support at the high of bar 37. And the expectation is that this breakout and follow through, 39 and 40, will get a second leg up. It's a pretty significant trendline break. The bear trend line being here. The market breaking far above it. Probably buyers below 40. And then inside bar, probably buyers below 41. Bar 37 high still expected to be support. And we finally get a pullback, bar 42, finding buyers below the bar, maybe at that breakout point. Bulls expected to get a second leg, and now 42, bull bar closing on its high. So okay to buy here. Bears probably will not sell above 42. They'll wait to sell maybe at the high of bar 40 instead. Reversal and follow through, probably buyers below 43, going at least a little bit higher. And then a 3-bar micro channel, finding some sellers above 40, but now it's another 3-bar micro channel and a tight bull channel. So probably buyers below 44. Then 45 is a bear breakout bar. Relatively small bar against a tight channel. The bears can argue it's a big bear breakout. Low 1 and low 2. So maybe a low 2 bear flag. But the lack of selling pressure through here, the tight bull channel, suggests that this is a breakout on a higher time frame. This is a minor reversal on bar 45. There's more likely buyers below these bars and probably going to get more to the upside for the bulls. 45, good risk reward, but low probability sell. And then bulls getting trend resumption. Strong breakout bar 46, probably going at least a little bit higher. And a pause bar, not great for selling, probably more buyers below 47. And then another micro channel, breakout, pause, breakout 48, probably buy the close 48, buy below 48, expecting higher prices. Micro channel here, tight channel since 39. And continuing in this micro channel, probably buyers below 49. Expect a minor reversal. The channel up is very tight. Testing yesterday's high might be resistance. We just broke far below. Now we're testing this tight trading range area again. So you might have the traders who bought back here scaling in lower, taking profits here. But the bulls have such strong momentum with this swing that I expect any reversal here. The bears basically have to do something really strong to convince me that we're reversing. Otherwise, anything like 45 or 41, 42, it's probably a minor reversal before more sideways to up for the bulls. So 51, expect minor reversal. Inside bar, small bar, probably buyers below. And then a big breakout bar 52, one of the biggest bars in this swing. Look to the left, we're testing some resistance, so this might be a good profit-taking bar for the bulls as we're far above the moving average, testing resistance. Also resistance here, remember these breakout points, 8, 9, and 10. So there's a layer of resistance here, so this is becoming a good location for the bulls to take profits, but still hard to make an argument for selling because the selling pressure all the way up is almost non-existent. It's very weak. 53, bulls get a follow-through bar, but testing that resistance. So still we're in this resistance zone. Might be better to take profits here. The upside might be limited. You can count at least 3 legs up. Maybe it's 1 or 1, pull back, 2, pause, 3 at resistance. 54, it's kind of similar to 36, but in the opposite direction. Sorry about that. It's probably due to profit taking from the bulls, not necessarily strong sellers coming in. Might be okay to exit longs below 54, but it's still expected to be a minor reversal, and the bulls will probably get another leg up, probably buyers below 54 and 53. But now we've gone sideways for 3 bars at possible resistance in a third leg on a trading range day. So continuing to go more sideways to up here, the bull channel continuing, it's still technically a micro channel. So 57 still not a great stop order sell, probably buyers below the bar. 58 bear breakout, but the first bear breakout since 45. So probably a minor reversal. Even though it's at a pretty good location, momentum is too strong to be selling bar 58. It's a low probability trade. Now 3 legs up in this channel, so better to be selling above 57, even though 59 is a decent breakout bar. The context is not great. Leg 3 at resistance. Traders are starting to take profits here. And then another pause, pull back, another leg up 61. That's leg 4. Still at resistance. In this channel, the channel likely to evolve into a trading range, which means probably at least test the low of 54 here. Bear breakout 62 after 4 legs up, so we may be getting a correction and a test back down to the start of the channel on the lower time frame, the low of 54. And the market gets there quickly on 63. Pretty strong breakout and follow through. It's probably always in short. Should have mentioned, if you're long here, it's probably okay to hold long. I said you could probably exit below 54, even though a minor reversal is likely because it's 3 legs up, far above the EMA, near resistance. But once you start getting the channel, you can exit below a bear bar. You can exit longs below 60. You can exit longs below 62. Those are reasonable exit locations. And then a big breakout bar 63. If you're still long, probably just sell the close 63. Strong enough breakout, probably going at least a little bit lower. And then another follow-through bar for the bears. Good for the bears. Strong 3 or 4 bar micro channel, but approaching support, yesterday's high. And also this small inside bar, followed by the bull breakout and follow-through. In theory, small trading range. Sellers above 51 get trapped, and we're testing that area. So expect support there. But strong enough momentum, not great for simply setting a limit order to buy there. Maybe wait for a second entry long. Micro channel continuing to grow, probably sellers above 65, expect a second leg down. And we continue to grow here, sellers above 66 and 67, or 65 and 66. 67, outside up, good for the bulls. Location, okay for buying, but momentum down, not great for buying. Have to expect sellers above these bars and at least an attempt at a second leg down. So 67 is a good bar for the bulls, maybe starting to get decent buying pressure, but the buyers may not come in until maybe below the bar. We're finding sellers above 65 and 66, and at the moving average as the bear micro channel attempts to get a second leg down. But 67 was strong enough that there's probably buyers below. 67, pause, attempt that second leg, and then a second reversal back down on 70 for the bears. Breakout, low 1, low 2 short, but sell the close bears, 66. By the way, that's 3 legs down on the lower time frame. 1, pullback 2, pullback 3, so not ideal to sell the close 66, but any trader who did sell 66, trapped by 67, disappointed, that creates support down here. So when bar 71 gets there, you have to expect there to be support. Bears buying back shorts and bulls buying in the buy zone of 67. And that produces a breakout bar for the bulls, 72. For the bulls, maybe it's breakout, pullback, second leg, but testing resistance. The top of this tight trading range. There's probably sellers above 72, not great for buying up here. Limit order market, tight trading range, sellers above, buyers below. 73 goes outside down, but it's right back down at support. So probably buyers down here. That's 3 tests of this support. 1, pullback, 2, pullback, 3. So 73, probably more buyers below the bar or by the close. 74, same thing, but opposite direction. 3 tests of this resistance. 1, 2, 3. So maybe more sellers up here. Limit order market, have to expect those limit order traders to come in and sell 74. Now the traders who did sell 74, trapped on 75. That's a bull breakout above the trading range. That creates some support. So there might be some traders buying below 75, which can produce a second leg up. We fall back into the upper or maybe the middle third of the range on 76, but because of the breakout on 75, there might be traders buying here, and that can produce a second leg up, which the bulls are attempting here on 77. But a lot of trading range price action through here, and this would be leg 3 on bar 77, so not ideal. Not ideal for buying 77. We're also approaching breakout points to the left, and this bear breakout down to 66 may simply be getting a pullback before a second leg down, so there might be more sellers up here. 78 breaking out, but testing the resistance to the left. So good breakout bar for the bulls, but leg 3 breaking above a channel line and testing resistance to the left. So as strong as bar 78 is, there might be more sellers. Remember that any trader who was buying back here got trapped by this bear breakout. If you put yourself in the shoes of those traders who bought, they're disappointed by the sell-off, and they're probably exiting longs around their original entry. And if they scaled them lower, they make a profit on their lower entries, but break even on their first entry. So we got a sideways bar, 79, probably sellers above, maybe buyers below. It's a micro channel, but it's leg 3 to resistance in a trading range, so not ideal for buying. And then pulling back, but it was a micro channel, and we're testing support. So we're bouncing here on bar 80, so we're just about out of time in the day. Probably sellers above this bar, maybe more buyers below, as it was a micro channel, and limit order traders will come in buying at support, looking for one more leg up in the breakout direction. But that was it we ran out of time at that point in the day. All right, that's going to be it for today's end of day review. Thanks everybody for watching, and for more Brooks, there's a link in the description of this video. Once again, thanks everybody for watching, and I hope everybody has a good night.